Hey traders, look at this bearish breakout of the major key level on cat Swiss pair. You can see that the market closed below that structure on the daily, the market retested that structure, and it looks like we will go much lower. And look what happened next. Instead of going lower, the market started to grow. We saw a very strong bullish continuation, and definitely the breakout here didn't work. In this video, I will teach you the type of breakouts that don't work, the breakouts that you must avoid. Don't forget to like this video, subscribe to my YouTube channel, and let's start. Let's take a look at Euro yen pair. We are on a daily time frame, and here we see a very sweet, very cute key level. Look, here we have a very strong horizontal structure support. You can see that many times in the recent past that structure was respected. Many times in a row, buyers were buying from that structure, and we saw a very nice bullish rallies from that. But then look, the price violated that key level to the downside, and for many days we were trading below that structure. And according to our classic rules, right now that structure support turned into a very strong resistance, and from that structure the price should start falling. The problem with such reasoning is that here we neglected the higher time frame analysis. Here we didn't analyze the weekly chart. And now we are in a weekly time frame. Here's our daily structure support that we spotted. Look how small it is from a weekly time frame perspective. And here, if we look left at structure, we can spot one more very peculiar key level. Look over here. Why this key level is so important? You can see that in the recent past, 2 times in a row, it was a very strong resistance. And of course, after the breakout, the structure turned into a very strong support. Now, from such a perspective, you can see that on a weekly time frame, the market is approaching a very strong zone of demand. And moreover, technically speaking, you can see that Euro yen is trading in a bullish trend. We are trading in a long-term bullish trend. And of course, that structure can be a very nice point for swing traders, for trend following traders to buy from. Hey traders, if you want to see how I analyze the market live, if you want to see how I trade the market live, I want to invite you in my premium educational group. There, each and every day with my students, we analyze the charts together. We analyze different markets. We are looking for the trading setups together. It will be the best experience for you. More info in the description below. The link is there, or text me in one of the social networks. I will give you more details. And now we are in a daily time frame again, and you can see that from such a perspective, a bearish breakout of the key level that we spotted on a daily time frame doesn't look that good for trading. Yes, even though, yes, the structure is broken, we are trading within a strong weekly structure. So for us, it is better to avoid trading such a breakout. Let's compare the structure breakout on Euro yen to the structure breakout on pound Aussie pair. As you can see here, we have a very strong key level. Yes, very strong structure resistance. And you can see that that structure was broken. Can we consider that breakout? Can we treat such a breakout? Let's look left at structure. We are in a weekly time frame, and here on the left we have a key level. Look, over here we have a very decent structure. And what is peculiar about that structure is the fact that it matches perfectly with the daily structure that we spotted. So here on pound Aussie, we got the bullish breakout of a key daily structure and of a key weekly structure. So of course, such a breakout is valid and we can trade it. No surprise that after the retest of that broken structure on a daily, we see a strong bullish continuation. Now let's return back to the cat Swiss pair. Let's discuss why the breakout there did not play out. Why the breakout of a key level on cat Swiss didn't work. Let's open the weekly time frame. I wanted to show you a very peculiar thing on a weekly time frame. As you can see, we have no horizontal structure here on the left. Our closest horizontal structure is right here. But if we pay close attention to the high lows, right here we can spot a very peculiar trend line. Look, from that point, we can draw this rising trend line. And you can see that many times in the past, that trend line was respected. You can see that many times in a row, buyers were buying from that trend line. And look what happened when the price reached our trend line. We saw a very strong bullish continuation from that. Returning back to the daily time frame, you can see that after a bearish breakout of a key level that we spotted, the market immediately approached a major rising trend line, and from that buyers started to buy. Of course, from such a perspective, perspective, the breakout that we spotted is not valid. Yes, it is not good. Such a breakout is better to be avoided. Yes, and analyzing this structure, looking left at structure, analyzing the higher time frames, quite often we can spot the trend lines, the horizontal levels like that, and they will help us to avoid the false breakouts. For more education, for more tips, join my premium educational group. There I will teach you how to spot only valid breakouts. The link in the description below. Please like this video, subscribe to my YouTube channel, and I will see you on the weekend.